Hi guys! Today we'll be looking at Danaher and check why I recently bought more of this strong dividend grower. In this analysis, we'll have a look at the different segments they're active in, the current financials, the valuation, and the growth potential in the next years. We will see if the secular trends are still intact or if their business is in trouble. And most importantly, we will see if Danaher is a good long-term investment for us. So, if you're looking to benefit from trends like genomic medicine, gene editing, or biologics, while still receiving a dividend, this is the video for you. The ticker symbol of Danaher is DHR, and they are listed on the New York Stock Exchange. They are active in the healthcare sector and were founded in 1969, have around 8,000 employees, and their headquarters is in Washington, D.C. The market cap sits at $150 billion right now. What is Danaher actually doing? On their homepage, they claim that they are the leading global life science and diagnostics innovator committed to accelerating the power of science and technology to improve the human health. So that means they are not in touch with the customer directly, but they are rather providing these machines, softwares, and tools for the companies that do the development, that do the diagnostics, that are working in these segments. The three segments they are active in is biotechnology, diagnostics, and life science. And you will never see any machines with the name of Danaher printed on it. That is because Danaher consists of many different companies. It's kind of like a group of different companies that are working all in these three sectors. So let's have a deeper look into the different sectors. Let's start with the biotechnology sector. In this one, they made almost $9 billion total revenue last year. They are very evenly split between the different geographies. And what I like a lot is that a huge portion of their revenue is actually recurring revenue. That is because they are not only selling the machines and the tools, but they are also selling the consumables that are necessary to operate these tools and these machines. Imagine like the COVID testing sticks or something like this. And here you can see in the biotechnology sector, it's actually two companies that are active, Sutiva and PAL. The trend growth drivers here is the shift in medicines towards biologics and biomedical, and also the increase in R&D for this biologics. Also, a huge part here is the genomics medicine that is just starting up, but is expected to increase a lot in the next years, which we will also see when we look at the market trends later on. The next sector is the life science sector, and here you can see there's a huge list of different companies. For example, maybe you heard of Leica, maybe you heard of Beckman Coulter, Paulus again, but also many others. In this segment, they made around $7 billion last year revenue, and the geographies are not as evenly split as in the biotechnology sector, unfortunately. Here, a huge portion is in the Northern America region, but the end markets are much more evenly split. Also, the recurring part of the business is still more than half, but it's not as huge as in the biotechnology sector, unfortunately. The growth drivers for this is again medicine shift towards biologics, genomics medicine, and gene editing, testing, and sequencing. Last but not least, they have the diagnostics sector. It's also the biggest sector of Danaher. It has a revenue of almost $11 billion last year. Again, North America region is by far the strongest region. And the recurring part of the business is the biggest of all these different sectors. So this is, again, very good to see. I like to have a recurring business with the companies that I own because it gives more stable growth over the time. There are not like huge jumps or declines all of a sudden, but it makes of a more even distributed growth for these companies. Here we can also see again the Danaher companies, so to say, that are active. It's like a Biosystems, Radiometer, for example, but also Cepheid that we saw before. The growth trends for this is definitely the molecular diagnostics that is just starting up, and that is that at least Danaher is thinking that they will penetrate the market in the future. but also point of care and decentralized diagnostics. That means like devices like, let's think of advanced smartwatches or these diabetes devices that are implanted in your shoulder that you carry around with you. You don't have to go to the doctor to get your diagnostics. You have it basically with you all the time. We saw that Danaher is consisting of not one company, but basically different companies that are all focused on the same core, the same principle, and they are all working in these three sectors. They are very good in merger and acquisition. They have implemented their own Danaher business system. You can see DBS, Danaher business system. They say that this is their ultimate competitive advantage, and it consists of three different parts: lean, growth, and leadership. So when they acquire a new company, first of all, they are trying to apply the lean part, and they are trying to find synergy effects with the other companies. For example, maybe getting the same suppliers to lower the prices for them, to find synergy effects from technology point of view, so they can reuse some R&D that was done for another company, for the newly acquired company, basically. But then they also try to train their leadership with a mentorship program, a training program. They have a very designated program for this, to improve the quality and the point of view of their managers. And third, they are focusing on the growth segment, and again they are trying to increase the growth for all of their companies by using these synergy effects between the different companies. The system they are using to do this is called Kaizen. You can see here it's they try to make problems visible, develop countermeasure, find a solution, implement the solution, and in the end invent a standardized process for all this quality and value improvement. So when we look at a couple of examples how Danaher did this in the past and how successful they were, we can see, for example, that at SciEx they could increase their revenue growth with new products of about 40%. At Beckman Coulter, they could launch more than 30 new products since 2018. At Leica Microsoft Systems, they could increase their revenue from new products by more than 40% in the last 3 years. So that means for SciEx, for example, when we look before the merger and compare it with after the merger, they jumped from a mid-single-digit growth rate to a high single-digit growth rate. Beckman Coulter, this brought it from a low single-digit to a low double-digit even growth rate. And at Leica also again for a low single-digit to a medium single-digit growth rate. Now let's have a look at the market trends in the three different markets that Danaher is operating in. First, when we look at the diagnostic testing market, we can see that the market is expected to grow with a CAGR of 8.6, so a bit lower than 9% until 2030, which is quite a good growth. When we look at the global life science market, we can see that the CAGR is even 10.8% on a global basis, which is very good. And last but not least, the biotechnology market, we have a whooping 14% CAGR until 2030. We can really see that secular trends and all these innovations happening in the medical sector right now are pushing the overall market to grow a lot. And I think Danaher will be one of the companies that can benefit most of all these growth trends. Let's look at Danaher's moat by doing the Portafy forces analysis now. So for the threat of new entrants, I would think it is quite low because of the high capex necessary and the big expertise to enter this market. Also, it might be possible for smaller companies to enter with a very specialized niche, but that is only an opportunity for acquisition and merge for Danaher. The threat of substitutes is medium. Basically, how I see the biggest threat here is the use of these consumables that are necessary for Danaher's machines, diagnostics and so on. They can be provided by third-party manufacturers that might be cheaper than Danaher, that might also have a bit lower quality, but still in the end it's price pressure for Danaher here. The competitive rivalry is also medium. There are not so many companies working in the sector. The main competitor here is actually Thermo Fisher. They are almost equal size. They're operating in the very similar sectors as Danaher. The bargaining power of the customers is quite low, I think, because of the essential character of their machines and the few competitors that Danaher has in this field. So their customers don't have any way around their product, so to say. The bargaining power of their suppliers, on the other hand, is unfortunately quite high to medium. Again, these are high-tech machines that need high-tech components. It's very specialized. Sometimes they are custom developed only for Danaher. So their supplier definitely have some negotiation power here. But the overall picture of the overall mode for Danaher looks to be still quite good, I would think. When we dig a bit deeper into the financials of Danaher, first of all, I got all these numbers from their last Q3 report they released in September or early October of 2023. And I don't want to look at any individual quarters because as a long-term investor, I'm interested in long-term trends, not on individual quarters, to be honest. Even when looking at the 9-month period, I think it's already reasonable because we can extrapolate it with a decent accuracy until the end of the year. But because we are already at the end of 2023, I like to look at the 9-month period instead of the old numbers from their annual report from 2022. When looking at all the sales for the different segments, and you can also see they have mentioned here the environmental and applied solutions sector still. They just spun this off in October, so this is not part of the Danaher company anymore. We can see that in all of these still existing segments. So when we look at the sales numbers here, we can see that in all of these segments, the sales is lower compared to last year, or except the life science, which increased a little bit. Same is true for the operating profit. We can also see it did decrease on a year-to-year basis a little bit. In this case, even the life science sector did decrease a bit. And when looking at the total company, the decrease compared to last year is quite significant. When we have a look at the balance sheet, and I used Seeking Alpha for this because the balance sheet is not included in the last quarterly report, at least not the number that I was looking for. We can see that the goodwill makes up a good portion of the total assets of Danaher. And this is something that you usually don't want to see. Here on the left-hand column, you can see the latest numbers, and you can see that the goodwill in this case makes up almost half of the total assets of Danaher. We already established that Danaher is a company that is very focused on merchant acquisition, and with all these merchant acquisitions, the goodwill increases, of course, in the balance sheet. So it is a number that I don't like so much, to be honest. But in this case, I understand where it comes from, and I don't think it is a problem for Danaher. When we look at the trend from the last years, it was always on a similar level, so it did not increase. When we look at the income statement of Danaher, we can see that in 2021 and 2022, we had a significant increase in the operating profit, but also the net income numbers. And this is related to the pandemic effects, where all their customers, or many of the customers that are related to diagnostics and testing of COVID, had to increase their capacities, basically. And now we can also see the reason why profit and net income are coming down in 2023. And it seems like also, if the forecast is correct, in 2024 again. But the long-term trend line, which I indicated with this red line in here, is still intact, and it seems like the growth trend, even in the next years, will continue, even though there is a short decline now. This is basically what we also just confirmed when looking at the market trends, that the long-term growth of Danaher is still intact. So when we sum this up by using my checklist, we can see that the revenue growth in the last 5 years was 8.5%, which is much higher than my target of 6% on a 5-year CAGR. Unfortunately, the value on the year-over-year basis has come down a little bit, but I think that this will continue growing at least after 2024 again. The net income growth is similar. The 5-year CAGR sits at 16.5% almost, even though the year-over-year value came down a little bit. And for the free cash flow growth, it's exactly the same. Year-over-year value is a little bit down, but the 5-year CAGR is still quite a good value, more than double than my target actually. The free cash flow yield sits at a comfortable 3.75%, which is also a green checkbox for me. And the balance sheet, even though we mentioned the goodwill already, but it is a very, very clean balance sheet for a company that is so focused on acquisition, merchant acquisition. So the leverage of the balance sheet is only 0.91%. That is really great to see. Danaher is paying a dividend, a very small dividend, admittedly for 0.53%, but the 5-year dividend growth rate sits at 12.04%. So this is a really a very nice dividend growth rate. I would expect that it goes down a little bit in the next years, but I also think that over the long run it will continue growing at quite a high value. Also, the payout ratio of Danaher sits at a very, very low 11.4%, which is doesn't raise any concerns. The margins and the return of invested capital is down in the last year, but just a little bit. And again, if you look at the 5-year CAGR, the margins and also the return of invested capital did increase over the long run. This is not surprisingly because this is one of the stated goals of Danaher. So you can see all the checkboxes are green here. This looks like, generally speaking, a very nice investment for me. Let's see if the valuation also fits at the moment. When we look at the price to cash flow and the PE ratios over the 10 years time frame, I used Seeking Alpha again for this. You can see that right now the PE ratio and the price to free cash flow ratio is the lowest it has been in the last 5 years. So I plugged all the numbers in my model here. You can see the stock price as of today is $209. And I estimated the free cash flow growth rate. I corrected down the numbers a little bit compared to the 5-year CAGR number that we just saw in my checklist. The reason for this is because I expect this to decline this year and probably also next year. Same is actually true for the net income rate. Also, I'd like to be rather on the conservative side again. So I'd rather estimate these values a little bit too low than too high. So for the free cash flow growth rate, I used 11% here. For the price to free cash flow multiple, I used 20 here. For the net income growth rate, I used 12% here. And for the PE multiple, I used 30 here. The price to free cash flow and the price to PE multiples in this case are more aligned to the general sector because the values of Danaher itself are a little bit higher, as we just saw in the graph. For the Gordon growth model, I plugged in the current dividend here and I corrected down the dividend growth rate from 12% to 8%. Again, same reason as for the free cash flow and the net income. When looking at these numbers and also including my margin of safety of 10% here, we can see that the fair value is estimated for all of these models at around 200, a bit higher than $200 US. The Gordon growth model is definitely an outlier here. We can see the estimation for this is only $104. But the reason for this is because the dividend yield at the moment is still very low. And the Gordon growth model only takes the dividends into account and not the total return of the stock. So in this case, I would eliminate the Gordon growth model because I don't think it's very accurate. And if we take the average of the remaining 3 calculations models, we see that the average sits at around $220 down here. That is $10 below the current, $10 higher than the current stock price. So for me, it seems like Danaher at the moment is a little bit undervalued even. Before we jump into the summary, please note that I am not a financial advisor and this is no investment advice. This is only my analysis that I share for entertainment and information. So please, if you are thinking about investing in Danaher, do your own analysis. Is Danaher a good investment for us or not? You already know that I am invested and that I recently bought more shares, so I think it's a good investment. The reason for this is that with the aging population, we have secular trends in all these sectors. Also, they are working for sectors that I think will grow and that will also help humanity in the future. It is currently undervalued, it seems, and many small and very innovative companies provide ample room for further merger and acquisitions for Danaher, which is their core competency. Also, with the global population growth and also the trend to a more aging population, I think all these diagnostics and biomedical machines will be more necessary in the future. On the other hand, we have the risk that the bioprocessing industry especially is in a downturn right now, probably until 2024 from what we can see from Danaher's business numbers. There is a risk that they cannot repeat their past success in acquisitions, but with the Danaher business system, I think this is highly likely still a risk I would like to mention here. They have a localization risk because a good portion of their revenue is generated in the US. So if anything happens in the US, it might definitely affect Danaher. And the last risk, what we also talked about, is the high goodwill to asset ratio that they have. Please tell me down in the comments what you think about Danaher, what you think about my analysis. Do you agree? Do you not agree? Do you have any additional points that I maybe missed? Also, it would be great if you can leave me a comment and subscribe to the channel. It would help me out. With that being said, thank you very much for watching, guys, and see you next week. Bye-bye.